Just wanted to ask him, Lou, in terms of what your business entails, what it actually, what you guys actually do on your side.
All right. So we found that people find money intimidating or scary, and when they think of banks, like, oh my God, it's a big building. They're not going to really talk to me. So what we do is we get them ready in terms of setting up a business plan. But what we do differently is that we focus more on coaching this thing rather than writing it for you. Because if I go into a dungeon and I write this business plan on your behalf, you, one, don't understand what's written there. You did not participate in the strategy development of this thing, etc., etc. But when we go the journey and we do various sessions, we actually co-create this business plan, and not just the business plan for business plan's sake, but for strategy, for modeling, for where the opportunities lie, and then also for raising capital. And what I like about that is when they then meet the banker, who's a person, and they have a conversation, they can actually speak to the business plan because they actually developed it with Money Fundi.
Yes. No, that's correct. And whilst you are chatting there, I kind of realized from our end in terms of the financiers, in terms of what that could actually bridge that specific gap, because you would find with small entities looking to enter the market, they'll just come and say without anything presented, right? But what you are actually doing on your side, you are getting them ready, and in terms of what the requirements from a financing house would actually require, so that it can make life so much easier for them, right? Initially, we're having a few conversations around purchase order financing. Now, as a financing house, we currently do that, right? Obviously, from who the actual off-taker is.
Okay, all right.
Who the actual off-taker is. So, financier can actually just take a view of who the actual off-taker is.
Okay, so how I would put that in the Money Fundi version is, so think of it this way. You going to varsity, and they saying, okay, your mother has a good job, so we trust that your mother will be able to pay these fees. So now it's no longer about me being able to pay my varsity fees, but now my mother can cover it, right? So you look and say, okay, your client, in this case, your mother, is actually able to cover this. So we will give you 80% upfront because we trust that your mother's got a good job, there's a pay slip, great client. And then the nice thing is you now don't have to prove all the collateral and all of these other things, because now the risk is incumbent on said client. So I think it's a great way to get into markets, and it's a way that you don't actually then need to actually raise funding. But what you're doing now is the main task is get your customer, and you are able to actually deal with your customer. And in that transaction, then the bank has been able to provide the oil that makes the transaction flow.
No, I actually like that analogy of the mother and the daughter and everything like that. But in layman terms, you've summed it up quite nicely, right? And obviously in terms of the university or the varsity, just taking a view on the mother, that's what we actually trying to actually do, because we know and have realized the actual obstacles to enter that specific market. It's like you trying to find a job but you don't have experience.
And what I usually ask them is, instead of funding is a seed that then needs to germinate and create fruit. Funding is not the fruit. But sometimes I think now when SMMEs think about funding, they think that is the ultimate goal and that's the ultimate fruit, right? And as long as you can show me the picture of the fruit, then you will get the seed in order to manifest the fruit. But you need to focus on the fruit, also known as the deal or the client, etc., etc. And for me, I say your time is better vested in sourcing your first 10 customers than it is trying to source funding and you don't have any customers yet.
So in actual fact, what you're saying is that you need to build your book.
You need to book your customer portfolio,
Yeah.
and from the deals that you have with them and whatever you sign, letter of intent, PO, then we can start having a conversation with the financing house.
Because with the financing house, we look at who you have.
And that potentially is your uncle, as in the client.
As in the client,
yes, who has a lot more, experience, balance sheet, etc., etc.
Yeah.
Something else that I usually also share with them is, when we're starting this journey, what's your credit score sitting like? Like, I'm an entrepreneur. I got nothing to do with the credit. No. Unless you have a big balance sheet, I know you guys look at the person. Like, hey, how are you doing as a person? So your credit score, personally, I know that it still affects your business application. So I also get them on the journey of start fixing. And sometimes it's something as small as 500 Rand that you forgot at some retailer, etc., etc.
Yeah. Because of that, as you say, the individual will be the shareholder in the specific entity.
And you don't have a balance sheet. So we're looking at you.
So we look at you. So from first step, as you said, we look at the entity itself, but if we can't get anything from there, then we obviously have to move on to the individual to back up the transaction.
Yeah.
As I'll go back to your analogy always, it's nice and simple in terms of mother and daughter. Varsity will focus on the mother.
Exactly.
In terms of that. But I like what you are actually doing to get the clients in to actually enter the market. We are not the blockers, right? But we require certain things, like any time when an individual, if you purchase a car, you purchase a house, there is a requirement, right? So the funding is there, right? But obviously they need to meet those specific requirements. But obviously, as the world is evolving, financing houses are also evolving.
The funny thing is, when in my workshops, when I ask the question, would you fund you? You can literally see most faces go.
No, I heard that in that session.
It's like, no, I wouldn't. So if you wouldn't fund you given how you treat money, how you handle it, are you trying to scam the bank to funding you? So when they have that realization, then they see the importance of actually starting to fix it from a personal standpoint. And what I usually share with some of our enterprise supply development clients is that if a person does not budget personally, the likelihood of them budgeting in their business is minuscule.
Yeah.
So first fix the person, and then show them that they are also an asset. And when they are a good asset, then they can build another asset, that being their business.
That's 100% correct.
Yeah.